Welcome to IVSA Chart Analytics, your best signals stock market indicators. IVSA Chart Indicators is based on the time-proven Wyckoff-Williams volume spread analysis. It tells you when you should be in and when you should stay out. No more second guessing. It features a stock screener that allows you to follow the smart money. You virtually get in before the public does. Profit with the smart money. Simple, accurate, and available on desktop and mobile devices. Test drive our IVSA chart now.
Thank you, Studio B. Hello and welcome to Stock Review with me, Trishna Patel. We will be looking at the stocks covered in corporate profile this past week. And I have JC here from TradersTruthReveal.com who will help you understand these stocks from a technical standpoint. Thank you, JC, for taking the time to be with us today.
Thank you, Truss, and it's good to be back here for the stock review. And how was your Malaysia day?
It was very good. How about yours?
Good. Very good.
Okay, and so JC, let's kick off with DRB Hycom Berhad. M Research recommends DRB Hycom as a buy stock with a target price of RM3.60, while Public Investment Bank rates it as an outperform stock with a target price of RM3.20. Now, do you think that this is justifiable considering that DRB Hycom closed at RM2.21 on the 29th of August when the first quarter results were announced?
Yes, if you look at the chart that we have here from the IVSAchart.com, you've seen for the last 6 months, this stock has really been flowing on a downtrend and finally establishing a base around RM2.15 there. Now that is a very nice base, what we call a technical point, a double bottom. So finally, we have the right side of the double bottom has with a lighter volume. As such, eventually we see strength. Then we have the breaking above the 50 moving average around RM2.20. So that's a lot of sign of strength coming in here. So this DRB Hycom has already priced in a lot of the bad news in here. It looks pretty good. Upside, we can see this return back to at least RM2.50, but RM3.20, it's still a tough one to recall.
So JC, what is the outlook going to be like for the coming months?
Now looking back at the Bloomberg research chart that we have here, which actually looks back in the last 2 years. Now remember, DRB Hycom is going to be launching the new Proton Global car. That's global, so I'm assuming they will be competing worldwide. Now there's a lot of competition also from the Tata Group and with the famous Nano car, which is selling less than $2,000. So it's going to be a lot of competition. On top of that, we also have the Purdue coming up with their new small subcompact car too. So a lot of competition coming in there. So that's why we are seeing this downtrend in there. However, analysts which have been very bullish, you can see on the right side there were a B, green arrow showing it a buy. So pretty much established a base with RM2.20. Moving forward, this is not a very exciting stock. Now you all know that the US FOMC this coming Friday will be announcing whether they're going to raise interest rate. Every time interest rate is been raised, that will have an impact on our Bank Negara Tan Sri Zeti. So if there is another interest rate hike, non-performing loans, okay? Now also remember, non-performing loans for car, a lot of car rejection, a lot of car sales turned down. So that's going to impact DRB Hycom in the mid to short term.
Now, moving on to Parkson Holdings Berhad. Parkson has been experiencing a bottoming out phase in recent years. Now, can you walk us through its price and volume chart in the past 18 months?
Like to do that, Truss. Now, if you look back the last 6 months charts that we have for the IVSA chart, we can see there were a lot of selling somewhere back in May when the market broke down. Now what we have in our IVSA chart is just above the volume chart is the red region. Now the red region denotes this is a bearish phase which actually runs almost for about 1.5 months. We didn't turn until mid-June when we see that green bullish region comes in. So this green bullish region will help to keep investor and trader who are using the IVS chart to stay in trend. That's very important. But let's look back, why did the market turn? Now remember, sometime in early June, we have the turnaround also in the Shanghai exchange. Now remember, Parkson has almost 60% of its revenue coming in from China. It's pretty much a China stock market play. Stock market in China going up, in this case Shanghai Stock Exchange, so we are also looking at Parkson going a bit higher. Now up to a point where we are now at 3 ringgit 10 cents, that's a strong resistance in there. So we are seeing a market taking off a bit, probably due to shorter term profit taking.
Now, Parkson Holdings recently rebounded off the low of 2 ringgit and 20 cents to test its long-term downtrend line at 3 ringgit and 15 cents. JC, can you elaborate on that?
Now again, we look at our Bloomberg chart, which actually show a bigger time frame on a weekly basis of the last 2 years. Parkson hasn't been really that exciting. You know, if you notice, it also competes in what we call a retailer mall. Now the trend has been, if you notice, there will be on the 19th, Alibaba, you know, the IPO. So a lot of talk about online retailer. Now remember, Parkson has always been traditional brick and mortar mall, and you have this online mall like Tao Mall. So that's a lot of competition, especially in China. That is going to have an effective long play. So investor who is looking to invest in Parkson must consider the impact big giants like Tao Mall and as well as Amazon China will have an impact on the traditional mortar on Parkson. That's why if you see that the current what we see on the chart around 230 ringgit, that's the base. You know, it may rebound back to 350, but it's going to be a sideways movement from all that because the future for Parkson isn't that rosy, if you can think of.
Next up, Barakah Offshore Petroleum Berhad. Profit recognition for Barakah is expected to pick up in the second half of this year, and this is coming on the back of higher installation and construction activities, as well as the execution of the Pan-Malaysia new contracts from June this year onwards. It is also awaiting a transportation and installation tender from Arab Saudi by September this year. Now JC, in your opinion, is this the right time to pick up on the stock?
Now, like it or not, all the information, the development has been priced in from a technical standpoint, from a price and volume in the IVSA chart. Like it or not, all this good news should eventually break above the 50-day moving average, which you can see on the lighter trend line of the moving average. Lots of signs of strength sometime between July to August, but it became a failed test. Now, failed test is actually a sign of weakness. Eventually, market breakdown around 1 ringgit 52 cents until we had it just at 138. So that's not good. Investor trader who want to accumulate this would like to see a bit more sign of strength coming in there, and perhaps the trend indicator that you see on the right side of the chart, which is just above the volume, which is still red, whole regional red, begin to turn green, then you might want to consider accumulating Barakah Offshore.
So JC, can you walk us through your stock projections for Barakah in the coming months?
Now, interesting enough, from the Bloomberg research chart in here, sometime in May 2014, there was a buy call at that time, but market could not break above the 182 ringgit mark. Eventually drifted sideways and then break into the 1 ringgit 50. At the same time, in early September 2014, there was another buy call. Market did break lower. Now, like it or not, when analysts who is bullish about a particular stock, market doesn't go higher, that's not a good sign. When you break lower, just be careful. That's all I have to say to the trader investor. But at this point, I like to see this stock move back, perhaps holding up a support around 120, 125 ringgit in there, and wait for the sign of strength to appear on the IVSA chart.
Now let's look at another oil and gas player, Dayang Enterprise Berhad. Dayang is proposing a private placement of up to 10% of its current issued and paid up capital. The private placement will result in 82.5 million new shares being raised, and this would increase the share capital to 907.5 million shares. Now JC, what would this mean for existing shareholders?
Very simple. Dilution, dilution, dilution. More shares coming in, which means the pies are getting smaller for the existing shareholder. So that's why we can see from the IVSA chart that is also reflected when it broke below the 200-day moving average, which also coincides with the 50-day moving average at 3 ringgit 70 cents in here. But since then, holding up above at 345, perhaps we may see a possible double bottom at 345 in here. Every time when you have a private placement, right, assuming, going forward, the capitals are used wisely for expansion and for enhancing earnings, then we will see a bit more upside from here. But for the time being, it looks like the market is tending sideways. As you can see also from the bullish region that you see just above the volume, it is still red pretty much from August onwards.
Now, JC, in terms of price over earnings, how is Dayang compared to other oil and gas players in the market?
Price and earnings, if you look from the last chart that we have, is about 22 times, which is slightly above average, I would say. Nothing to be excited. Now remember, with this right placement that is coming in there, earnings will definitely be diluted. So price will have to compensate for that one. That's why we're seeing price coming down to maintain the earnings. But having said that, Dayang since June 2013 has not made much of an impact, just moving up about 10% in here. Going forward, it has to have more good news, perhaps to see this break back to 4 ringgit for Dayang Enterprise.
Now, JC, during this past week, several stocks garnered some investor interest, and this included department store and supermarket operator AEON Company Malaysia Berhad. It has been looking to venture into the furniture retail market by November this year. Share prices of AEON shot up 0.79% to close at RM3.84 last Friday when the news broke out. So JC, walk us through AEON's price and volume chart this past year.
Now, if you look back the last 6 months on our IVSA chart that we have here, really hasn't been excited except it hit a new high around 4 ringgit 25 cents in July. It has since been drifted sideways. Now remember, AEON is also operating in the same environment at Parkson, but with except AEON pretty much focused in Malaysia, except Parkson is in China. So remember, there's a lot of what we call margin squeeze in there, also more occupancy rates. Those things take into play. Now, if you look from the price, anytime when the stock price, in this case, break below the 50-day moving average, that doesn't seem to be good. But however, currently still supported around 3 ringgit 80 cents and also paying a relatively low dividend, about 1.5 cents. It's not really that exciting, and like it or not, more kind of thing really depend on disposable consumer income, which we've been talking about since the 2013 election in there, where a lot of civil servant has been given a certain amount to spend. Now remember what's happening now, also GST is coming into place, and remember GST take money away from the consumer. So pretty much AEON is pricing the GST impact into its stock price now.
So JC, is this the right time for investors to pick up on AEON?
Yes and no. Now, yes, it's because it is still at a nice price, around $3.80 in here. Dividend should improve. I hope AEON management will increase the dividend for that to be, this is as a good income stocks. Now, before any accumulation, I like to see more sign of strength like test or a bit of a 2-bar reversal around 3 ringgit 75 cents onwards before I will pick up a bit of AEONs.
Now JC, in another piece of news was the disposal of Malewa Steel Sdn Berhad by its parent company Malewa Industrial Group Berhad. Now it was reported last Friday that the group fully disposed of Malewa Steel Tube to Micron Steel for a cash consideration of 70 million ringgit. Now, in a filing to Bursa, the Malewa Group said that the disposal will not result in any gain or loss to the group. But on the day that the news broke out, the stock fell 4% to close at an intraday low of 48 cents, with 7.2 million shares changing hands. JC, is this a cause for concern for existing shareholders?
I would think so. Normally, any disposable of asset, whether it is good or bad, should have some results on the balance sheet. But in this case, disposal of a good asset, I would think the steel industry is a good asset, then it would have some sort of a gain. But having said that, the market has already moved ahead of it since September, because I think the market was anticipating good news from this disposal. But having said that, no impact to the balance sheet, no impact to the profit loss, so investors don't take it lightly. That's why they're selling it now.
Now JC, in your opinion, what should sideline investors be doing right now?
I would actually ignore this news and perhaps look for another better stocks. A lot already been priced in on Malewa Industrial Group in here. Perhaps market have to go back to give me some sort of nice entry level in here. I don't see that on the Malewa chart.
Now JC, you picked Signature International Berhad as last week hot pick. What else can you tell us on this?
Now, if you look at the hot pick that I done last week, Signature International, it did break to $2 because last week from the insert that you see on the bottom side here was only $1.95. It's gone up to $2, and then you have a 2-bar reversal, but market hasn't break down yet, still holding at $1.95. Lots of signs of strength coming in here, and I hope that the Signature International will break higher, but we have to wait for the volume to increase.
Now, JC, any hot stocks for the week?
Yes, for this week, I've picked the SPK Resources. Now, like it or not, I like SPK Resources because since August, the market has been hovering sideways. A lot of tests coming in here. Yes, you will see that the red region, which is the trend indicator, has turned red, but I'm waiting for volume to come in. When once volume come in, we will see this perhaps break above the 64 cents. A little bit of nice dividend, paying about 2.8% dividend. Meanwhile, you're still getting a nice dividend in here, and PE is relatively low, around 10 times. This one is going to look like, and next week I will come back and review this with the audience.
Thanks, JC, for your insights. I'm afraid that's all the time we have for today, but be sure to catch us next week for more hot stocks. Have a good trading week. Back to you, Studio B.